Hello, this is Elena Olansky, William Wittenberg, and Andrea Friedman with World Crypto News. Today we want to talk about the major Wall Street sell-off. Wall Street firms are clearly sending negative messages about cryptocurrencies, such as Merrill Lynch will not allow its clients to invest in either cryptocurrency or Bitcoin ETFs. UBS brokerage arm is prohibiting its US clients from trading in cryptocurrency products. Moreover, JP Morgan, RBC, Citigroup will not allow access to Bitcoin futures that are traded on the CME and CBOE. And despite all these restrictions, there is no doubt clients have an interest in participating in cryptocurrency market. So Andrea, is there another side to this big sell-off?
Well, it's unbelievable the flip-flopping that's going on with Wall Street. For example, you have the CEO of JP Morgan Chase, Jamie Dimon, coming out 2 months ago calling Bitcoin a fraud and comparing it to the tulip mania. Then 2 weeks ago, he comes back and says he regrets calling Bitcoin a fraud. So if you ask me, Jamie Dimon is acting like a crazy ex-boyfriend and Bitcoin is the one that got away.
So Bill, is there another side to this view of negative news?
Absolutely. First, we have Tom Lee at Fundstrat, who was the first analyst to cover Bitcoin, predicting that it will trade approximately 2.5 times higher than it is trading today, and that Ethereum, which is trading around number 1100 today, will trade 1900 by the end of the year. But Saxon Bank, which is one of the largest Danish banks, is predicting that Bitcoin will trade $100,000 by the end of this year, which gives it a multiple of 10 times its current price. And thirdly, I think we have to remember that Charles Schwab, the second largest brokerage firm in America, has fewer customers than Coinbase, which started less than 4 years ago, which indicates that this market, while it's obviously had a big sell-off, is not going anywhere soon.
Yeah, it's very interesting, Bill, that you bring up Coinbase, because recently the largest mobile app stock trading platform, Robinhood, announced that they're going to be adding cryptocurrency trading to their platform. And within 48 hours of announcing this, over 1 million people pre-registered for the cryptocurrency exchange on Robinhood.
So it is safe to say that bulls are remaining bullish. However, since cryptocurrencies had such a great sell-off ever since 2017, now Ethereum, Ripple, Litecoin have seen double-digit losses as well. So what are some of the reasons for this big sell-off, Bill?
Well, there's two reasons. We had a huge Ponzi scheme collapse, which involved cryptocurrencies, and we had the South Korean market problem.
So
and
let's
Andreas,
talk about the Ponzi scheme.
On the Ponzi scheme, BitConnect, which many people have seen ads on YouTube for, basically promised people 1% a month as interest on their Bitcoins if they transferred the Bitcoins to them in exchange for the BitConnect token. Needless to say, that sounds too good to be true, and of course it turned out too good to be true. However, prior to this discovery of it being a fraudulent activity, the market value of the BitConnect token was $2 billion, making it one of the largest scams in the history of the financial markets. And then, of course, Andreas knows about the South Korean market.
Right, so the South Korean market is one of the largest cryptocurrency markets in the world, evidenced by the price usually trading at a 20% premium. So there's a huge demand for cryptocurrency in South Korea. However, government agents came out about 2 weeks ago calling cryptocurrency an illegal form of currency. And what happened was the people literally went to the streets. Over 200,000 signatures were taken, and subsequently the South Korean government overturned their original statement, not calling it no longer an illegal currency. And instead what they're doing, they are going to be requiring people to provide their full information in order to trade on the exchanges. So no more private accounts will be allowed.
And it's interesting to know that when China announced the ban on cryptocurrency exchanges, Bitcoin fell to almost 50% and then recovered and went to make new highs. So that suggests that the decentralized nature of cryptocurrency could limit the impact of the government regulation. And Bill, what is other international views? What are other countries doing to regulate Bitcoin?
Well, the whole world is very interested in what to do with Bitcoin and the other cryptocurrencies. The French government has appointed a minister to investigate the plans, and they are going to discuss it with the German government, who has also created a minister to investigate. And then the two countries will present to the G20 in March a plan on how to, and this is very important, regulate, not ban, but how to regulate the cryptocurrencies. And we look for these European countries and the other countries of the world to require full identification when you buy cryptocurrencies, because all you always hear about cryptocurrencies is that they can be used by bad actors, terrorists, and for money laundering. So we anticipate that there will be an increase in the regulations coming from the G20 meeting in March.
So it's a lot of know your customer type of policies that are coming into effect. And that brings us to our next topic, which is privacy coins and the rising interest to those.
Exactly. So the crypto community has responded to these regulations with a huge interest and boom in what is called privacy coins. So what is privacy coins? You have Monero, for example, Zcash, Dash. And what these coins do that is different than the Bitcoin blockchain, for example, are they create a completely anonymous transaction, meaning both the sender and the receiver and the amount of the transaction is untraceable.
Mm-hmm. So Andrea, is Bitcoin right now somehow related to the privacy coin?
Okay, so right now, no. Bitcoin is not considered a privacy coin because the transactions are semi-anonymous. They're still publicly viewed on the blockchain. However, it's very exciting. There's going to be an upcoming fork of Bitcoin. So there's a coin called Z Classic, which is from the Zcash family, that's going to be forking off of the Bitcoin blockchain on February 28th, creating a new privacy coin called Bitcoin Private that's going to be a completely anonymous coin.
Exciting news. So guys, let's talk about the elephant in the room. What are the main vulnerabilities we see in Bitcoin? And the first one is for you, Bill. The slowing down of Bitcoin and whether it is a currency or not a currency.
Well, this is the big debate, and there is no doubt that Bitcoin suffers from two major problems. The first problem is confirmations, which used to take seconds, is now taking hours and sometimes days. Secondly, a lot of people used to say that you could use Bitcoin to transfer money rather than someone like Western Union because the fees were so low. Well, it turns out now, because of the heavy congestion on the network and the way it's designed, the fee for sending $30 is $10. So it has lost that advantage. However, don't think these issues are not being addressed, and we anticipate a Lightning Network solution to come soon. The Lightning Network's a little complicated, but very simply, it is not a new blockchain. What it will allow people to do is to use Bitcoin, but not put the transaction for very small amounts, micro amounts. If you're buying coffee at Starbucks, you can use the Lightning Network overlay on the Bitcoin blockchain, and this will eliminate the high fees and will eliminate the problem with confirmations.
Well, it's a brave new world. Let's hope it's coming soon. So, Andrea, for you, please tell us a little bit about the vulnerability of Bitcoin to hacking.
Sure. So traditionally, the vulnerable spot with cryptocurrency has been these centralized exchanges. So we have examples such as Mt. Gox, Bitfinex, large amounts of cryptocurrency, Bitcoin basically being stolen. And just recently, the second largest exchange in Japan, over almost $500 million was stolen. So these centralized points of exchange are virtually impossible to prevent hacking from occurring. So what is happening are a trend in what's called decentralized exchanges. So these are peer-to-peer, completely trustless, open-sourced exchanges that prevent the possibility of hacking from occurring.
I see. And how do you use the private key in terms of protecting yourself?
Well, first thing that's most important to understand is that the person who controls the private key controls the Bitcoin. And when you buy a coin on an exchange, if you leave it at the exchange controls the key. So if you're worried about hacking, which you should be, what you do is you do not leave your coins on an exchange. You put them on a wallet that is off the internet. That means you don't put it on a phone wallet, you don't put it on your computer, you put it on, and these are the choices, a paper wallet, which means nothing more than you copy down the private key on a piece of paper and put that in a safe deposit box or anywhere you feel safe, or you put it on the equivalent of a thumb drive and remove it from the internet, and that thumb drive is safe. There are two well-known thumb drives. I have one with me, Nano, and one called Tracer, which people use to keep their coins off of exchanges. Now, there's one footnote that I have to, in fairness, say. As we know, these coins are very, very volatile, and it is possible that these exchanges will not be able to handle the coins that are off the exchange when you want to sell them, so that there is an argument to keep it on the exchanges, but I have to say that if it's off the exchange, you don't have to worry about hacking, so that's preferable.
Perfect advice. So some closing remarks for our viewers. Andrea.
This is an amazing revolution that's happening right now. It basically allows individuals to become their own private Swiss bank, if you will. If you own your private keys, you keep it on your Trezor or your Nano, you are now your own bank. And it's just the beginning. We are at the very early stages of the adoption curve, and really, the sky is the limit.
Great. Bill?
Well, I think the biggest point that we have to be concerned with today is government regulation. For instance, in Indonesia, you are not allowed to buy anything with a cryptocurrency. Now, that is terrible. However, it is more likely that the world, and we expect the G20 to come up with regulations that will be know your customer rules, so that governments are not worried about wrongful actions with the cryptocurrencies. And these regulations will cause the rise of these private keys that Andrea discussed before, private currencies. But the bottom line is cryptocurrencies are here to stay, and they're going to stay in a regulated environment.
And please don't forget to have your private key. This is Elena Olansky, William Wittenberg, and Andrea Friedman with World Crypto News.
Good night.
Good night.